Looks like we're in for another subdued start to the trading session. Let's bring in Ross Healy, portfolio manager at McNichol and Associates. Thanks so much for joining us, Ross.
Nice to be here with you, Amber.
So it seems like we're at a bit of a, we've got tension points. Of course, we've got the Middle East flare up, and then you've got, can we rely on the U.S. and the U.S. growth? And we're going to be getting data points that either support that or make us a little bit worried about that. Which camp are you in? Are you excessively concerned? Do you think we can add to the gains we've seen so far this year?
I'm sort of in the camp of it kind of looks toppy, but there's enough momentum there that suggests to me that don't look for anything too imminent, and indeed our own internal work suggests exactly that. Soft landing, hard landing, no hard landing, at least not as of yet. And so we don't, we're not very concerned about it. When we look at the market, we look at the U.S. in particular. We see some nice positive things. The earnings forecasts going into 2025 continue to rise. They're not rocketing up, but they're just sort of oozing upwards. Because of that, companies are buying back their stock at a record pace. So they're kind of taking money out of the market, and in the meantime, if you look at the liquidity numbers, they're kind of edging up as well. So as we head into the election and into 2025, I would say that we're sort of modestly positive. Not on all sectors of the market, but modestly positive overall.
So that's interesting when you talk about the earnings side of things, because earnings were great and estimates are going up. I'm a little fixated on sales. That was kind of disappointing, and I wonder at some point, doesn't sales come home to roost at the bottom line, especially if you got a softening economy?
Oh, I have no doubt about that. And I think one of the big things that I think sort of overhang the market, speaking about sales, is in the area of AI, of artificial intelligence, and what is sort of going on there. And when we look at it, it looks very much to me that the great momentum that we had is not being in terms of the chips and all the rest of that kind of stuff, which was and which were driving things like Nvidia and Microsoft and so on. But now people are kind of looking and saying, well, where are the customers' earnings? And they're not finding them, Amber. So that suggests to me that area is going to slope off and maybe slope off fairly badly. But let's cross that bridge when we get to it. So
well, the
that
Nvidia CEO in the last 24 hours saying that the demand for those chips are, quote, insane.
Yes, exactly, and of course that's exactly what he would say too.
Yes and no, right? He can't just go out and say that if it turns out not to be true. He'll have to pay. The stock will pay for that.
Oh, I think so. It's not only Nvidia that I think one wants to look at when you talk about the artificial intelligence and the application and so on. But you got to look at the two companies, Alphabet and Microsoft in particular, who have the platforms that sort of sell that stuff into the market. Now they bought an awful lot of those things. Now, and the question is, are they now going to replace everything that they bought now that the new and faster chip is coming in, or not? Well, from my point of view, I think show me the money, honey, and show me the sales results, and we don't see that. So
You have to, okay, I mean, this really splashed onto the scene this year.
Yes.
We have to be a little bit more patient, don't we, to go from investment to product?
Yes.
It's not going to happen in the span of 2 quarters.
No, of course it isn't going to happen in the span of 2 quarters, but although, mind you, the sales of the chips have been going on
Yes.
for some period of time. It's the application and who's making any money that is the real, I think it's the real issue from our point of view.
So are you staying away from the space entirely, or are there different ways that you think are a little bit more reasonable to get in?
I would, generally speaking, avoid that area because it's extremely expensive. The Nasdaq has actually now peaked out twice. Once about 3 years ago, and the second time earlier this year, at 9.5 times book value. Well, Amber, in a long-term sense, how can you make money if you're buying stocks at 9.5 times book? Where you make money is when you buy them at 1 times book or 2. You're hoping then that momentum carries on, but time is increasingly against you.
That's interesting that you call out those valuations because, you know, Google is trading at 21 times forward earnings, and you quoted a different metric for the entire space.
Yes.
But Meta, I think it's around 26 times.
Yeah.
Microsoft's around 30. I mean, you could argue that they deserve just that tiny bit of premium. Alphabet has no real premium. So is it true that they're that expensive?
Meta is probably the one stock of the Magnificent Seven that I would probably say, yeah, okay.
Okay, yeah.
I would stick with the other risk. I would be considerably more concerned about.
Okay, well, you're going to stick with us because we're going to find out how that concern is manifesting in the portfolio,
Yeah.
where you're going to play that defense. Ross Healy is our guest with McNichol Associates. Stick with us. He'll tell us where he's going for gold exposure.